Good morning, everyone. This is Arlo Miranda with Remax All Pro. I'm out here in the San Fernando Valley, actually, so you may want to bear with me if you hear some noise. I'm not in my usual habitat. I'm back again here with Jeanette Duarte from Mountain West. How you doing today, Jeanette?
Good morning. Doing good, thank you.
How was your 4th of July weekend?
It was good, busy. We went out, did a little camping. But yeah, weather was good. We were out by the beach. How was yours?
Oh, okay, that's it was good. If you tell, my face is burnt, so I was actually at the beach with my family. It was a good day overall. I actually fell asleep and then woke up, ate a lot of eating. That's about it. Yes. But I'm gonna go ahead and start my show the way I usually start it by updating you guys on the market. Just to let you know, there's 158 listings this week, which is a little bit less than last week. Last week we had 179. So there's 21 less houses in the market. Just to give you a good idea that the market does shift. Sometimes there's more inventory, sometimes there's less. This week there was 116 that closed. Last week there was 131. So typically when there's less listings, there's going to be less canceled, less under contract. Last week there was 157 pending listings. This week there's 126. So as we go along week to week, I'm going to update you on the listings just so you can see how the market shifts. Was there anything that changed in the interest rate tonight?
Yeah, so unfortunately, they went in the direction we didn't want them to go in. They increased a little bit from the prior week that we did this. Conventionals right now going with the same kind of purchase price of a 500,000 with 5% down. We're right about 6.875. And then the government financing, FHA and VA, were a little over 7%. So they're still continue to climb a little bit. We're hoping, that they'll settle back down just a little bit. Normally during usually a 3-day weekend, or this one was kind of smack in the middle. We do see a lot of times that the rates do go up during holidays.
Okay, and what determines your interest rate when
Um,
you're
so
trying to purchase a home
yeah,
as the
so
buyer?
so as a buyer, the what determines the interest rate is their credit score, of course, is huge. Plays a big key factor in that. Their loan amount that they're taking out. So not necessarily the purchase price because they could be putting a big amount down. So it's based off of the loan amount and then their overall debt to income. And then lastly, the loan type that they're actually going with, whether it be conventional FHA, VA, or USDA, or one of the down payment assistance programs.
And if you have better scores, do you get a lesser interest rate?
So yes and no. Back a couple years ago, you used to see a larger gap in the interest rates with credit scores. So we used to see, maybe a 2% interest rate with somebody that has a 2% gap between
Mm.
somebody who had lower credit scores and somebody that had higher credit scores. In today's market, we're not seeing that huge gap, but what we're seeing is the actual cost and points being paid for the interest rate with the credit score. So if they have a lower credit score, their rate's not going to be much different than that person that has a good credit score, but the cost that they're going to pay for that interest rate is going to be a lot more than somebody who has a good credit score.
Oh, and that's something I wanted to ask you because you mentioned points, and people ask me, should I buy points, and how does that work?
Yeah, so sometimes you don't have a choice, right? So what points means is the cost that you're going to pay for the interest rate. So it's converted into a percentage. So let's just say it's a 1 point, a 1 point cost for the rate, then it's going to be 1% of that loan amount. So you have a $500,000 loan amount, you're going to be paying $5,000 for whatever rate you're going to get. So to kind of take a step back, if they have the lower credit scores, they really don't have a choice. I'm going to say, here's the rates that there are today, and here's your rate options. You have this one, and it's this cost, and this one, it's this cost, and this one, it's this cost. So usually with the lower credit scores right now, there's going to be a cost with whatever rate that they choose. It's just going to be a higher or lower cost. Now you get somebody with good credit scores. Now they have some options because we can say, hey, today's rate is 7% with no cost. What we say is par, meaning even no cost for this rate, and they can choose that rate. But let's just say that's 7%, but then they want a lower interest rate. So then there's some options. We can say, okay, We can go down to 6.75, but it's going to be a 1 point cost for that, which would be 1% of the loan amount. And then you continue on and see what's available. You can't just go all the way down to 2% because there is no 2% rates, even if they were willing to pay for that. So every day, throughout the day, rates change, and we're given what we kind of consider rate sheets. They're not actual sheets anymore. We run them through the
Yes.
system, but they're given options. So I can say, okay, at 6.5, here would be the points that you would have to pay. 6.25, here's the points. At 6, here's the points. And then that way they can choose which one they would like to go with, and then how much money that they have to come in with extra on top of their down payment and closing. They would need this additional money as the points to buy the rate down.
Yeah, and you know what? I have a lot of people tell me, as I go along talking, they ask me, do I think the interest rate is going to go down? And I tell them, do you think it's ever going to go down to 2%? Or they'll tell me, hey, I'm going to wait till it goes down to 2%. And I said, you know what? One of the things about real estate is that you don't wait to buy real estate. You buy real estate, then you wait, and then you hope it appreciates. But I tell them the only reason it was at 2% because our economics was different then. So what do you say when a client says, hey, Jeanette, I'm going to wait till it gets to 4. I'm going to wait till it gets to 3.
I say kind of the same thing as you say. I tell them, one, don't wait. If it's the right time to buy, it's the right time to buy. If you can afford that monthly payment that we go over the numbers and that works in your budget, then buy today. And then that way, this payment is going to stay the same. It's going to be a fixed rate, 30-year interest rate. And if the rates happen to go lower, then we can refinance you at that time, as long as you meet everything to refinance, and then get you a lower payment at that time. And the reason I don't tell them to wait is because the longer they wait, the less house they're going to get. And what I mean by that is, today a house is 300,000, but let's say they wait 6 months, that $300,000 house is now going to cost them, let's say, 325,000. So if that monthly payment now puts them out of their budget, they can no longer buy that same house, right? So now they're having to
Yeah.
get less house for what they can afford. So it's better to buy now. That way you get the house you want, whether it's the bigger house, bigger square footage, bigger lot, and you can make that payment, and then down the road, if we can refinance you, then that payment will be less.
Yeah, because you know what, and that's something that always people tell me because they're like, well, I'm not gonna buy at 7% if my brother bought at 2%. Well, I'm not gonna purchase at this percent because this person bought this percent. Do you ever find yourself when you talk to clients, they never give you their situation, that they give you other people's situation, and then they base that situation on what they're gonna make? Because that's something that I get like all the time.
We get that all the time. And then what happens is, so they want to compare to their brother, their cousin, their dad, their
Yes.
whoever. They also want to compare to 5, 10, 15 years ago, which we know our market changes drastically and overnight. So you can't compare something today that even to 6 months ago or a year ago. But we do get a lot of that comparison. And what I always remind them is, not everybody tells you the whole picture. This
Yeah.
person tells you what they want you to hear. They didn't tell you that they came in with more down. They didn't tell you that they got a cosigner. They didn't tell you that they had to pay things off. So they only give them what they want to give them in here,
Yes.
not the true total picture. Because then if they gave them that and they came to us with that, then we can compare apples to apples, but they usually don't.
Yeah, because that's if your brother's not gonna tell you exactly how much he put down and how much he has in the bank, they're always gonna do a little bit extra. So that's something that's big out there in the market about the interest rate. One unique thing about our company is that we have Remax All Pro, we have Escrow One, and we have Mountain West. It's all individual, but it's all in one location. So I wanted to talk a little bit about Escrow. Escrow is a neutral third party, and the reason I bring up Escrow because I hear people ask me, hey, when I give my deposit, do I keep it? I'm like, no, I don't keep it. Well, does the seller keep it? I was like, no, I was like, it's a third party. It's you, the buyer, and it's you, the seller. Can you explain a little bit about escrow?
Yeah, so escrow is, like you said, a third party that kind of coordinates the entire transaction. So they're the ones that deal with all parties that have to do with anything within that real estate transaction. They're going to deal with the seller. They're going to deal with the buyer, the buyer's agent, the listing agent, the title company, us as the lenders. They're going to deal with all the invoices that come in from outside vendors, whether they do a home inspection, if they do the home warranty, all of those invoices, everything comes through escrow. And as you mentioned, that initial escrow deposit goes into escrow, they hold it there. And then when we get close to closing, the final funds that the borrower is going to wire in is then going to go into escrow as well. They hold it there. So they kind of hold everything and coordinate everything, contracts, invoices with whoever needs them, the parties in the transaction. And then with us in the beginning as the lender, we have to reach out to them to get what we need from them, opening package, escrow instructions, title reports for our file. And then we also coordinate with them throughout. And then definitely at the end, because we coordinate with them to make sure our closing disclosure, the CD, is where it needs to be. Numbers are in line. We coordinate our docs and get docs over to them so they can coordinate that signing with the buyers. And then our funders work with them to do the final wire transfer and be able to close out that loan. So they have probably one of the toughest jobs, I would say, within our whole real estate transaction, because they're dealing with so many different people, so many different parties to one transaction.
Yes, and they're holding the buyer to their word, and then they hold the seller to their deadline. So they have to make sure that everyone does what they're supposed to do when they're supposed to do it. But you never
Well,
go ahead.
so they're not huge on the deadline piece of it. So your agents need to be on the deadlines. They're just coordinating everything. And then the agents hold escrow to those deadlines saying, hey, we're supposed to close by this time. Can you make sure everything's kind of ready and good to go and everything is cleared and docs are in and signed so we can close by this deadline that we had in the contract?
And do you also coordinate with the title company as well? Because I know the title company's job is to make sure that the seller is the seller and to make sure that there's any liens. When it comes to title, is there anything that you guys look at, or do you guys even get the title report?
Yes, so we don't coordinate anything through title. That goes through escrow. Escrow coordinates and pulls that from title or request title fees, request a title report. We'll request an updated title report if it's expired. And definitely that's a report that both agents will receive and they need to review those. A lot of agents don't review them. They just get it in the file. Us as the lender, we get that as well and we review it because we are looking for any liens that come on the property. Any main ones, of course, are any tax liens, any personal liens. We're looking for solar, anything that's going to potentially cause our loan to go into a second lien position. We don't want
Mm.
that. A mortgage company is always going to want to be in first lien position. So we're looking to see if there's anything that's on title that would prevent us from being in first lien position. And one of those things too is called a HERO program. So it's an older thing that has been out for a long time. It does go in big cycles, and what that is borrowers take out like a loan from a company to do upgrades to their house, and they attach it to the property through the property taxes. Now that can't stay outstanding when we do a loan, so that means that has to actually be paid off through the close of escrow by the seller, by the borrower, by somebody. Because if we were to close and leave that program outstanding, they go into first lien position. So we'll always make sure that it's in the contract, who's going to take care of that and how that's going to get paid to make sure that that lien does get resolved and cleared through the close of escrow.
So if the listing price, so if the first mortgage was 50,000, and let's say the listing price was 100,000, but they had a solar lead that was for 30, so you guys would get paid first before the solar company does.
So no, that has to be in contract, right? To say, is the new buyer going to assume the solar
Mm.
and take over payments? That's one thing. Or is the seller going to pay it off? Because maybe that's in contract that they negotiated that the seller is going to pay off that $30,000 solar lien. So it's whatever's in contract. Now, let's just say seller is going to pay it, then escrow will make sure they order the payoff demand, and that'll come from the seller's net proceeds. If the buyer is going to take over those payments, then the transfer has to be taken, completed during the close of escrow. So escrow will be coordinating that. The seller has to reach out to the solar company, give authorization to talk to the buyer. The buyer then has to reach out to the solar company and start the transfer of it. And what basically happens, the easiest as I can explain it is, the solar will remain on the property, but what title does is they basically remove, not title, solar will do, what they'll do is they'll do paperwork, which will kind of remove the lien off of the property. And then they have the paperwork right behind it with the new borrowers to record right after. So they'll show paperwork pulling off the seller, let us record our new lien, our first mortgage lien, and then they'll go and re-record the solar for the new buyers right behind it. So we get recorded first, solar gets recorded second, we're still in first lien position, and now solar's in the name of the new buyers.
Okay, and one last question I wanted to ask you. Well, actually, I have two last questions. I want to talk a lot about home inspections because I've seen that when it comes to the home inspections, a lot of homeowners are on the impression that whatever. Well, one thing I like to say is that you're gonna find things wrong with the house. No house is perfect. You're gonna have your problems, and the whole point about the home inspection is he's gonna check the plumbing, the electrical, the roof, the foundation. But whatever's wrong with the house, the seller necessarily doesn't have to fix. And something I try to get through to buyers is that he's there just to tell you what's wrong with the house and to make you aware of the house. He's not there to tell you what needs to be fixed. So there's a big difference. So you, in the lending side, do you ever see the inspection report, or do you even want to see it, or do you have to see it?
So we don't want to see the inspection report. We do not need the inspection report unless it's called for. So when I say it's called for, the underwriter may call for it. Let's say they're requesting requests for repairs, or something comes up where they mention it, they may request it. So we don't want it, because once an underwriter, us as lenders, see the repairs, then things can be called out by the underwriter to be fixed prior to close of escrow. So the inspection, the home inspection report is just for the buyer's eyes. You as the agent, you guys look at it, it's to make them aware of anything that is there, maybe an issue, or it can potentially become an issue. So like you said, there can be pages and pages of things that could become an issue, like
Yes.
maybe a hairline, little crack in the stucco, letting them know, hey, we looked at it as an inspector, there's a little crack here. If you don't take care of it, eventually it's going to become a bigger
Yeah.
problem. But is the house going to fall down because of it? No.
No.
So any major health and safety issues should be identified when the appraisal is completed. The appraiser is going to identify those, call them out. They'll need to be repaired prior to close of escrow. We'll get a reinspection. But that home inspection itself is just for the borrower's knowledge, for them to be able to make a decision. Do I want to continue and move forward with the purchase of this property? Or do I want to cancel and go look for a new one because maybe there's going to be too many issues? Another thing is it kind of is a trigger for the borrower, because maybe the home inspector says, I'm not a licensed plumber, but it looks like maybe there is some potential issue. Then the borrower at that point could then pay for another inspection and say, let me get a licensed plumber out here to put the camera to check things to make sure, because plumbing could be expensive right down the road if something goes wrong with it. So that way they can do another check and say, okay, check that off. The plumber said everything's good. I did my home inspection. I feel good purchasing this property, right? So other inspections that maybe a home inspector might say, hey, that roof looks to be like a little worn, I'm not sure. And then they can hire a roofer, a professional licensed roofer, to go out and check it. So a home inspection, a lender doesn't want it, don't give it to the lender. Once you send that to the lender, it could open a can of worms.
Oh yeah, because when and I we've had a client before that the roof was messing up, and the roof was messing up, and then he told us, hey, I can have my cousin fix that. I know someone I can do that. And people don't understand that when it comes to the home repairs and things that need to be done to the house, a licensed professional actually needs to do it. because like I said, it happens all the time when people say, hey, I know a guy that can do that. And it's really important that I want to stress it to people that it has to be a licensed professional for insurance purposes, correct?
Well, and it just depends. So let's just say for appraisal purposes, yes. So if the appraiser calls out something on the roof, then it needs to be a licensed roofer that goes out there, and we're going to actually
Oh,
request
okay.
for most likely a 2-year roof cert to show that it still has 2 years of life beyond, and that the repairs were done. So it can't just be a handyman. If it's plumbing, that's called out by the appraiser. It needs to be a certified licensed plumber. Now, let's just say they close on it and there's some little things that need to be done. They can have whoever they want completed, but when it comes to major things like the roof, the plumbing, especially the roof because of water leaks, potential mold, that type of stuff, then it always needs to be a licensed inspector or licensed person that's completing it. It can also be a licensed contractor. So somebody may have a general contractor's license and they can go and fix something that needs to be done, and then they sign off on it. We get an invoice from them, we get their certification that they are licensed in that field.
Hmm. And one last question that I wanted to ask you, as I go around, while I'm 37 years old, I noticed that my age, a little bit fewer, are a little bit hesitant to buy or not as urgent as I would say the past. So why do you think it's still important to purchase a house today?
Yeah, I always say it's the one of the best guaranteed investments, right? You can have 200,000 sitting in a bank, and how much interest are you actually going to make on that? Go to any of your
Yeah.
large banks, you'll be lucky if you make a 0.5% interest on your fund sitting there, unless you get it into some sort of CD, money market type account that's going to make you more interest. In California, besides when the market crashed, back in 2008, which was a huge, of course, disaster to our market, but that was done. There was a reason, because the reason that happened. But for the most part, in California and probably some other states, but I know California, our properties continue to increase in value, right? So sometimes, like during the COVID years, it increased drastically. So it was a little bit of an inflated increase in equity there. Now it's still continuing to increase, just not as rapid as it was before, but we're still continuing to increase. So it's almost assure that you're going to make money eventually when you go to sell your house. The other big reason is, why are you going to, you have to rent no matter what. You have to pay, whether it's a rent or your mortgage. You have to live somewhere. Why not make yourself money? Because right now, every
Yeah.
month that you make that mortgage payment, that rent payment, you're paying somebody else's mortgage payment. Um, when you could be making it for yourself, gaining equity, you have this when you go to retire or you want to move, you have this equity. So you're helping somebody else.
Yeah.
But what you're allowing even more so is for them to have control of your life, because whenever they need, they're going to give you 30-day notice and say, hey, I'm
Yes.
ready to
Oh
sell this
yeah.
house. You need to get out, or I'm ready to move back in my house and you need to get out. So now you have 30 days to try and figure things out of, let me see if I can get an apartment. Let me see if I can rent a house. Now let me see if I can try to buy a house in 30 days, which makes it very hectic on you as an individual. And then I just had a client recently too that had pets. They had 3 dogs. It's very hard to find a rental that's going to let you rent with 3 dogs.
Yeah.
So they were given their 30-day notice. Luckily, we were able to get them a house and get them qualified and closed within, I think it was like, the whole process was about 30 days, which worked out. The landlord gave them a few extra days to actually move out. But why have somebody else have control of your life and when you need to do things? So one, you're in control. Two, you're making money for the future.
Yeah, and to close it, and it's interesting that I wanted to bring that up. Is that my generation, when they say that they don't want to, they're not ready to buy a house because they're always worried about the market crashing. And you brought up the 2008, and I always ask them, did your mom or dad lose their property during that time? And they're like, yeah, I did. They did. So I was like, so what if that happens to me? So that's kind of why that's why I bring you on the show, and that's why I wanted to start the show with you, is I know you're really knowledgeable in that field, and to let people know that they don't have to fear buying a house, they don't have to be scared. But to close, I did want to ask you, do you think my generation, they are worried about it because their parents went through that crash?
Um, yes and no. I think more people that are younger that are hesitant to purchase are living a little bit more comfortably because they are still living at home with parents. So they're not making that larger mortgage payment. I think people become comfortable with, I want the nicer car, the fancier car, so that's a
Mhm.
higher car payment.
Yeah.
They like going out, they love doing things on weekends. So they have this lifestyle of, I want and I like to do all of this. And then they make a smaller monthly payment. In their eyes, they see, okay, if I go buy a house, then that money needs to shift over to that house payment. Now I can't do all of these things, right? So
Yeah.
it's more of a lifestyle change that people have to realize that in order to purchase a house, you do have to make choices. You know, you have to think, okay, this is my main priority, and then whatever money I have left, now
Oh,
that's my fun
okay.
money, right? So
That's
it's a
true.
mental thing that they need
Yeah.
to shift over to. I think they're just so used to not having to make that larger payment because a lot of people do still live with family, right
Yeah.
now.
Okay, no, yeah. Well, that's the end of our show. I thank you very much for joining. My name's Arlo Miranda, Remax All Pro.
And Jeanette with Mountain West Financial.
Thank you very much. We'll look forward to speaking with you guys next week. Thank you.
Okay, so I'm going to end it and then I'll send
Okay.
it to you. Okay,
Okay.
bye.
Okay.